All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. All right, before we start, please ignore the risk warning, right? All the products that are traded here are on margin and carry a high level of risk, and it is possible to lose all your capital. Also, please take note of the disclaimer that the information in this webinar should not be considered investment advice or investment recommendation, but instead educational material only. Right. My name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, right, we're going to take a look at some of the key economic events that occurred yesterday, as well as what's coming up for the rest of this week. So as we all know, this week was inflation in the US, right? We had inflation data out of the US. We had PPI data released on Tuesday, followed by CPI data, which was yesterday, Wednesday, alongside with retail sales as well. Right, so that was yesterday, 15th of May. And this evening as well, or rather later on today, we've got US unemployment claims coming up as well. All right, so let's take a quick review of the CPI data, right? We knew PPI data came in hotter than expected, which did cause a temporary surge in demand for the US dollar, but that move was short-lived. And after that, fast forward to Wednesday CPI data, which came in softer, which came in overall, which has an overall a soft reading, right? Created a strong, uh, strong selling pressures on the dollar as well, right? It triggered a strong sell-off in the dollar. Now, okay, this is the economic calendar for this week, right? Or rather from Wednesday onwards. So you can see the latest readings on a monthly basis and annualized basis either came in line with the estimates or came in lower than the estimates. So that's why I said this month's reading, which was for the month of April, was relatively soft, right? So CPI seems to have stalled, right? Remember in the first quarter of 2024, both PPI and CPI were seen accelerating. However, for the month of April, we are finally seeing CPIs sort of stall, and perhaps this is the start of or the resumption of its downward trend, right? So of course, if inflation starts to uh, taper out, of course, and then resumes its downward trend, of course, that means that the Fed is quite likely going to bring forward its first rate cut, or it increases the probability of the first rate cut by the Federal Reserve, right? And also we saw retail sales coming in flat on a monthly basis, right? And we saw the previous month's reading, which was the figure for March, being revised down from 0.7% to 0.6%. So this also highlights a potential weakness in consumer spending. So if we see inflation continuing to drift lower in the coming months, as well as other macroeconomic indicators such as retail sales starting to slow down, right? The Fed may be inclined to bring forward its first rate cut in a bit to stimulate the economy as well. Remember, we also had the preliminary result or the advanced estimate for Q1 GDP for 2024, which came in at 1.6%, which was the lowest reading uh, in almost 2 years, and also it came in lower than the estimate. So there are some signs that the US economy is starting to slow. And should that take place, right, and should we see that being highlighted in incoming data, that would of course also sort of increase the probabilities of the first rate cut by the Fed, right? Okay, so they're looking at two things, or well, they're looking at a few things. If inflation continues to trend lower, and also if other macroeconomic indicators start to indicate a slowdown in overall GDP output, they may also cut rates to stimulate the economy as well. All right, okay, then we also had Aussie employment data released today, right? When employment change and the unemployment rate, although we had strong figures for the jobs growth, but we saw unemployment rate increase to 4.1%, coming in higher than estimate as well. Not only that, unemployment rate in the month of March was also revised higher from 3.8 to 3.9%, while the figure for April came in higher than its estimate for final reading of 4.1%. So mixed results for Aussie employment data. So we'll take a look at the Aussie as well after that. And tonight we've got a few things as well. We've got industrial production, building permits, and unemployment claims. Right, so let's take a look at that. So let's just quickly review the CPI data. So this is these charts here show headline CPI data. So on the left, I have the chart for the month-over-month change, and on the right, I have the annualized change or year-over-year. So finally, on a monthly basis, you can see we have seen a slower rate of increase with CPI rising 0.3%, whereas if you look at it from October of 2023, there was a strong rise or increase in the trend of monthly CPI data. Now, if this continues to stabilize and perhaps trend lower on a monthly basis, that's also obviously going to help push the Fed closer to its first rate cut. Similarly, on an annualized basis, which is the chart on the right, we saw inflation accelerate in the first quarter of 2024, right? We see it accelerating here, and also we see it accelerating here on a monthly basis. So we see it here on an annualized basis as well. And finally, we are seeing a potential slowdown, and we may see this downtrend resume as well. Now, looking at core CPI, similarly on the left, I have the chart for month on a monthly basis, whereas on the chart on the right, it shows the annualized basis as well. So looking at the monthly gains for core CPI, we see it rising pretty steadily since the middle of last year. And this time, there's a pretty large drop-off in the rate of increase as well. So should this trend continue moving forward, along with core CPI also falling on an annualized basis, all gives us further or gives the Fed further reasons to bring to perhaps get going with its first rate cut. Now, looking at retail sales as well. If you look at retail sales over the before the reading for April, right? If you look at uh, retail sales over the last 4 months prior to April's reading, it was somewhat mixed, but it did rebound strongly in the months of February and March. However, this time round for the month of April, it's come in at zero, it's been flat. And then you see at an annualized basis as well, the rate of increases has slowed down as well. We saw a nice acceleration here in retail sales on an annualized basis in the first quarter of 2024. Now, should we move forward, right? Should we see this trend continue to ease even further, right? It could point to a weakening in consumer spending, which also has a big impact on overall GDP output. Remember, the US consumer or consumer spending accounts for nearly 60 to 70% of GDP growth in the US. So if we really see the US consumer pulling back in a big way, that's going to have a huge impact on the level of GDP output as well. So in order to combat a sluggish economy, and if inflation continues to trend lower, right, the Fed, that raises the probability of the first rate cut by the Fed as well. All right, then looking at unemployment claims that is coming up today. So today we've got a forecast of 290,000, right? Last week's figure here, 231,000. But the trend, as you can see, over the last 4 weeks, prior 4 weeks before that, CPI claims were coming in lower, they were trending lower. And not only did they trend lower, they also came in lower than the respective forecast. So when unemployment claims come in lower than their forecast, it usually signals a robust labor market because you have less people filing for claims. And then this in turn usually functions as a bullish, short-term bullish catalyst for the dollar. Now, last week, we saw claims come in much higher than its forecast, which was around, I believe, around 212,000, I believe, and it came in at 231,000. Right now, so this week we've got a estimate of 219,000, and if you look at the 4-week moving average or the 4-week average for claims, it has come in at about 215,000. Now, so this forecast, the current forecast is already more or higher than the 4-week average, which does seem to suggest unemployment claims are perhaps starting to trend higher, and is something to watch out for. So if we see unemployment claims start to trend higher and at the same time come in higher than its respective forecast, this trend is likely to function as a bearish catalyst for the dollar, right? So if claims come in higher than the forecast of 290,000 later today, which is at 12:30 p.m. GMT time, take note my calendar is on GMT time. If claims were to come in higher than 290,000, this is typically going to function as a bearish catalyst for the US dollar. So that means currency pairs like the Euro, Pound, Aussie, and Kiwi are all likely to rise along with gold prices. Conversely, if claims come in lower than 290,000, That means you have less people filing for unemployment benefits. This is typically going to function as a bullish catalyst for the dollar. And of course, that in turn would mean Euro, Pound, Aussie, Kiwi, along with gold, are likely to fall as well. All right, hi Trevor. All right, okay. Right, okay. We can try and schedule Fibonacci masterclass as well. My fundamental. Oh, okay. Hope that oh, you're looking for a fundamental masterclass. All right, okay. Like the Fib. Yeah, probably we can try and set one up. Yeah, I'll look into it and get back. And get in touch with the team at IronFX, and perhaps yeah, we can arrange a fundamental masterclass as well. I think there was one conducted, perhaps at the end of last year. Maybe it's about time to bring it, to revisit that, masterclass this year as well. Yeah, definitely, Trevor. I'll take note of this, and we can get it out and I'll get in touch with the IronFX team as well. All right, just let me take note of that. All right, okay. All right, okay, then move. Okay, so this is what we have for unemployment claims. All right, okay, now with that, let's move on, dive into the charts and trading view. Of course, we'll start with the dollar index, right? All right, so as you can see here, I'm on a daily time frame. So you can see yesterday's candle, we saw a big move in the dollar index, right? It was trading at around 105, and it finally dropped as low as 104.27, right? Dropping about 70 pips in the process yesterday as well. So previously, we had identified this level here at 105 as a very strong overlap support. This was previously a strong overlap support, right? Of course, in finding a nice pullback support here on the 6th of November of last year, making a swing high resistance here in the middle of February, and making another swing high resistance here on the 1st of April, after which it proceeded to function as support on the 3rd of May. Now, of course, with this level now being broken very cleanly, of course, right, this, what was previously an overlap support, is now quite likely going to function as resistance. So our previous first support has now become our first resistance. Right, and the second resistance would be this overlap level here at 105.57. And we see price on the dollar index finding decent support at around 105.60 on 25th of April, all the way till the 1st of May, before finally giving way. After which, it proceeded to function as resistance on the 8th and 9th of May as well. So thus creating an overlap. And this is a level that we can use to identify as a second resistance. Now, with price starting to retrace a little bit higher today, we do see the dollar index finding support within the bullish Ichimoku cloud. Remember, the Ichimoku cloud can help us identify areas of support when it's green, and at the same time can help us identify areas of resistance when it's red. But in this case, you can see here in early February, the cloud acted as a little bit of resistance from 25th of Jan till the 1st of February, right, where it consolidated, where dollar index consolidated around 103.50 for a period of maybe 5 to 7 trading days before finally breaking higher, right? So in this case, the cloud initially did, the bearish cloud did initially offer some resistance. However, this time round, price action actually caused it to break higher. But when you look at what happened in mid-May, right? The cloud did offer a good area of support, and this is something similar that could happen as well, right? Although we see inflation coming soft this week, and maybe future economic output might turn sluggish. However, remember, nothing goes down or up in a straight line, so any retracement to the upside could be a potential entry. It could be a potential short entry for the dollar index as well. Right, you can also see stochastic oscillator dipping under 20 to highlight oversold conditions. Right, so perhaps the dollar index is really going to consolidate around this level today, and maybe for the next or for the rest of the week, it may retrace a little bit higher. Right, it does look like it's going to be a little bit similar to what happened on the 8th of March, as well as on the 28th of December. Right, you can see in these two occasions, right? On periods of time, we saw the stochastic oscillator indicate oversold conditions alongside with RSI, right? And we did see price stabilize to stage a mini rebound, right? Of course, on 28th of December, this was a strong bullish reversal. And also on the 11th of March, this was a second strong bullish reversal as well. Now, whether this one here on 16th of May is also going to lead to a strong bullish reversal, right? It really waits to be seen because now the macro data or the incoming data has somewhat started to shift. So perhaps now any retracement to the upside could be a potential short entry for the dollar index. Oh, great news, Trevor. Wow, really happy for you. That's awesome. It's really good to see that how our trading sessions and webinars have helped traders like yourself to maximize your potential as well. Great. I'm truly happy that you have done this as well. All right, awesome, great stuff. It's all down to you, right? We can only try and help you, provide you the guidance, right? And share our knowledge and experience with you. And when you put that into practice, it really, it really shows that, you can really learn from these webinars and put it into practice as well. Great news, Trevor. Awesome. All right. Okay. So coming back to dollar index now, of course, with this overlap support being broken, quite clearly, this is now going to be our first resistance. Now, where can we identify the first support? Remember, we have the cloud here as well to help us identify a major support area. And at the same time, when I look across this price level here at around 104.14, this also looks like to be a pretty decent overlap support here, right? Previously, back in early March, this was resistance. This level function is resistance. Then resistance again here in mid-March, and then proceeded to function as support in mid-March and early April as well. Now it does look like to be functioning as support once again. So we have the combination of this overlap support plus the bullish Ichimoku cloud to identify a potential area or to identify a strong potential support zone as well. Right, so this is how we, oops, this should be the first support, excuse me, this should be the first support here, of course, second resistance, first support. Now, if this first support doesn't hold up, if it gives way, where could we identify the next major support for the dollar index? That would be at this pullback level here, right? You see a little gap up here as well. And if I were to stretch it across, there's a pretty decent overlap here at 102.65 as well. So this is where I see the next major support level for the dollar index on the daily time frame. Remember, this is a swing low or pullback support that occurred at the end of November 2023. Then resistance here in mid-December, resistance again in early Jan before finally breaking higher, finding support here at the end of January and finding support once again in early March. So you can see very clearly this is a strong overlap support. Right, we can also run a Fibonacci retracement, this time starting from here, this low on the 8th of March, going up to the high, which is the absolute high. Is this the one? Yeah, this is the absolute high here, 106.51. Right, we can see that this first overlap support at 104 14 also has the presence of a 61.8% Fibonacci retracement, right? So that adds to the further significance of this level. Right, I'll highlight it as a zone. And we can also see that there's this little pullback here that occurred on this on the 21st of March. You can see, oh well, 20th and 21st of March, dollar index finding pretty decent support here, which is also a level that aligns well with the 78.6% Fibonacci retracement. So this is also another level to watch out for as well. It's not the strongest level, right? But it's also because we have the presence of a 78.6% Fibonacci retracement, it's also something to take note of. Should we see dollar index break below this first support now, this new first support here? But take note, we've got three factors that point to a strong support zone for now, right? We had the overlap support itself at 104.14, the bullish Ichimoku cloud, and the 61.8% Fibonacci retracement highlighting a very strong support zone. So we could see the dollar index at least retrace higher over the next or well to round up this week. But remember, we've got unemployment claims coming up later, so that's also going to have an impact on the immediate direction of this index. All right, now let's move on down to the 4-hour time frame and see if there's any opportunities that we can identify. Right. Oh, I would say let me just draw a Fibonacci retracement as well. Right, I draw a retracement from this high here down to the low. Let's pull up all the fibs. Are there any intermediate resistance levels that we can try and identify? Right, now let's go on over to the 4-hour time frame. Right, okay, we can see 38% aligned very well with the first resistance, 61 aligned very well with the 23. And I think we can use the 23% to help us identify potential intermediate resistance as well. So we're going to keep 23, 38, and 61%. And 23. Right, okay. And I also mentioned here, right, 23% because we see a pretty decent overlap level here as well. Right, I'm going to highlight this as an intermediate resistance here and highlight this as a zone 2. Right, so you can see previously back in March, 28th of March, this level functioned as resistance, then proceeded to function as support in early April, and then resistance here again on 5th April, and a little finding support here as well in early May. So as price retraces higher, perhaps we have a decent opportunity to short the euro or to short the dollar index around this zone here. Now, if you have gone long on the dollar index, or if we look at the 4-hour candle, if earlier today, maybe before during the Asia session, or right at the beginning of the European session, you have gone long on the dollar index, right? I would target this uh, zone at the 23.6% Fibonacci retracement as a potential take profit zone, right? And the stop loss would be placed slightly below this swing low or this pullback here that occurred at 104 dot at 104.08, sorry, at 104.08. So I would place my stop loss slightly 10 to 15 pips underneath below 104. Oops, wait, hang on, just let me label this a little bit more clear. Yeah, 104.80, that's where I would identify my stop loss level for any long positions here. Like for this is staging a mini rebound, right? Because of that, I would place my stop loss slightly below this level here, which is at 104.08. So that means 10 to 15 pips underneath this level would be a decent buffer. And I would identify my take profit at around this intermediate resistance zone that has where the 23.6% Fibonacci retracement level sits now. Should price rise up towards here and we see it stall and reverse, that may give us a pretty that may help us identify a pretty decent short opportunity as well. And should that short opportunity arise, we would then use this first support to identify a take profit level. All right, okay, then Trevor, you've got a question. Can you place uh fib from previous resistance high to low of the long wick? Okay, wait. Can you place the fib from the previous resistance high to the low of the long? Okay, sorry, which one are you referring to? Okay, let me try and label it here. Maybe it's a bit more clearer if I were to label it. Okay, wait, previous high. Okay, I've got one, this, oops, hang on. Right, I've got one high here, right? This is, I'll label this as a high here at number 1.1. I'll label this at 0.2, and I've ended the retracement at 0.3 here. So, okay, so which one are you referring to? Sorry. Sorry, we can just quickly finish this now. So, yeah, before we move on to the next instrument. Can you, all right. Are you referring to 0.1 or 0.2? Because I started this retracement here from 0.1 and I've ended it at 0.3. Oh, okay. So on daily, okay. Okay. So on the daily chart, are you still referring to 0.1? Oh, okay, okay, okay. Maybe we'll come back to this later then. All right, okay, no worries, no worries. We'll come back to this later. All right, okay. And let's move back down. Okay, so on the 4-hour time frame, right, similarly as well, we can see stochastic and RSI indicate oversold conditions as well. So, as today, as the dollar index was falling strongly. Oh, okay, I see. Right, okay. I think I sort of understand what you're talking about. Second resistance here. Okay, okay. So, right. right? So you can also see, right, stochastic and RSI indicating oversold conditions as well, and price finding strong support here at the pullback support and 61.8% Fibonacci retracement on the 4-hour time frame. Right. Okay. So this is what we have for the dollar index. So remember, should you have gone long on the dollar index, maybe at the start of the European session or maybe even during the Asia session, right? I would target a suitable take profit around this intermediate resistance zone where the 23.6% Fibonacci retracement sits. Your stop loss ideally should be just slightly below 104.08. So perhaps about 10 to 15 pips below, right? We see the 61.8% Fibonacci retracement level sitting at 103.95. Perhaps 5 pips underneath this level would be a suitable stop loss to identify as well. So anywhere generally slightly below this level here of 104, right, would give us a pretty decent stop loss level as well, as this is really does see appear to be a major support zone, right? So take profit for any long trades or for this rebound should be targeting this intermediate resistance zones at 23.6%. Of course, dollar index can always climb higher, right? But this should at least be your first take profit level that we would identify. Okay, let's move on over to the Aussie since we had Aussie employment data released this morning as well. Right, so let's look at the Aussie too. We'll start with the daily time frame. Right, so of course, with softer CPI coming in on Wednesday, 15th of May, it really caused a lot of currency pairs, right, to surge higher, especially like Aussie, Kiwi, Pound, and Euro. You will see very similar market structure or price action as well, of course, right? So previously, this was a pretty significant resistance zone, right? This was almost like a multi-swing high resistance zone for the Aussie, right? So 66.26 was like a multi-swing high resistance, right? We see it making a swing high resistance here. Another one here, 22nd of March. This was 11th March. Third one here on 10th of April. And one recently as well on 6th of May last week, right? Or rather almost 2 weeks ago, right? So you can see this was really a major significant resistance level, which finally got taken out because we saw a soft CPI reading yesterday. And of course, combined with weaker consumer spending as well. So that meets retail sales. So when we look at that now, of course, so what was previously a strong major resistance level, right, is now going to function as our first support, right? This is quite clear. And the second support, I see another overlap level here at 65.66, right? Uh, the Aussie running into resistance here at the right at the end of April, after which when it broke out of this level in early May, it proceeded to find support on the 8th and 9th of May last week. So last Wednesday and Thursday before bouncing higher. So quite clearly, this is the second support at 65.66 cents. Right. Now, what about resistance? Right, because we see price stalling around 67 cents here, right? This is a pretty strong zone. So I would say there's a pretty decent intermediate resistance around here as well, right? Between 67 cents and the top of this wick, which is about 67.15, right? So it's a pretty decent intermediate resistance zone here. And what about the first major resistance? Let's see, we can probably use a Fibonacci retracement to help us identify that. So we start the retracement from this swing high on the 20th of December, going down to this swing low on the 19th of April. We can see that we'll keep now 61 and 78.6. We can see that the Aussie today does seem to have stalled close. Okay, it's gone above the 61.8% Fibonacci retracement. Of course, but it does seem to have stalled around this region as well, right? And then the first major resistance might be coming in at this pullback level here. I see a pretty decent overlap, I should say overlap level here at 67.26. Right, this is where I would say the first major resistance sits for the Aussie, and we can see it form a pullback support here in July of 2023, then resistance on at the end of July of last year, then finding support here in December of last year, and after that proceeding to function as resistance in early Jan as well. So this creates a very significant overlap level, which we can use to identify as the first resistance. And of course, if I were to identify the second resistance, right, should we see the Aussie push higher? Second resistance is simply going to be this swing high resistance here that occurred at the end of December. Right, okay. Remember, we have like an intermediate resistance zone as well around here. Right, this is an intermediate resistance zone at 66.93 or around the area of 67 cents. All right. There's also, I believe, another Fibonacci retracement we can run. We'll start from here. This swing low, 19th of April, going up to today's high. I believe this might be the 38 and 50% that we could use. Wait, should be 23 and 38, I believe. Let's see. Yep, maybe it's 23. Yep, it's the 23 and 38 that align well with the first and second support respectively. Right, okay, so these are key levels here. Now, so we saw mixed unemployment report out of Australia, which has caused the Aussie to sell off now. Now, should we see uh, unemployment claims come in weaker than expected? Remember, if unemployment claims come in weaker than expected or lower than its forecast, this is quite likely going to function as a short-term bullish catalyst for the US dollar. So that means this current pullback in the Aussie dollar is likely to accelerate even further. Now, should we see claims coming lower than the forecast, which in turn would function, which potentially be a bullish catalyst for the US dollar, and then that in turn is likely going to cause Aussie to drop even further. Now, should we see that occur, right? Then that means we can use this first support at 66.30, right, to identify our take profit level for any short Aussie trades as well. And of course, with regards to the stop loss, right, we can see the top of this wick coming as high as 67.15. So we should place our stop loss about 10 to 15 pips just above this level here. Right now, let's zoom in on the 4-hour time frame. Okay, and not only that, before that, when we look at stochastic as well, it does seem to suggest oversold position as well when you look at it here on 11th of March and on the 9th of April, it did suggest oversold conditions as well. And the Aussie proceeded to reverse during that time. But take note, when stochastic has pushed above 80, right, has risen above 80, it doesn't mean every time it's above 80 it's going to stall and reverse. There are many periods of time, as you can see here, from 18 December till the 27th, so for a period of nearly 1 to 2 weeks. Despite stochastic sort of indicating oversold conditions or overbought conditions, sorry, the Aussie continued to climb higher. So take note, not every oscillator reading that's above 80 is going to indicate a bearish reversal. It just indicates that there is a higher probability that this instrument, or in this case the Aussie now, may be oversold as well, and it's currently being reflected in the price action. All right, now let's move on over to the 4-hour time frame for this currency pair. All right, Trevor, sure. After this, we'll move on over to, we'll cover the indices. Yeah, we'll cover NASDAQ, Dow, and DAX as well, for sure. Right, let's do that. Great. Great to see the recurs coming in. And just for everyone else as well, if you have any currency pairs or commodities or any other instruments that you like to see the analysis done on, do not hesitate to drop your request in the chat box. We'll be more than happy to go through the analysis with you. All right, let's try and conclude Aussie before we move on over to NASDAQ, Dow, and DAX. Now, what could also happen is, should we see unemployment claims come in higher than its forecast, then that is quite likely going to function as a bearish catalyst for the US dollar. So that means we could potentially see the Aussie perhaps stall around 66.60 or 66.50 and reverse to climb higher. So should we see data that's going to cause the Aussie to reverse, right, then I would say we would use this, since I'm on the 4-hour time frame, right, I would say use, oops, yeah, correct. I moved the intermediate resistance and I also moved this up. So I would say if we see a reversal for the Aussie because we see unemployment claims come in higher than anticipated, right? That means we can then identify a suitable take profit level that's going to be around 67.15 and 67.30. Now, where that reversal takes place, we can't tell because that data is going to be released in 3 hours, right? Remember, unemployment claim is going to drop at 12:30 p.m. GMT time, so that's in 3 hours exactly. So once that is released, then we'll get a clearer idea of what is likely going to happen over the next 1 to 2 hours following the news release. But take note, if we see claims coming higher, we will have a potential bullish reversal on hand, and should that bullish reversal take place, we can then target the first resistance between 67.15 and 67.30 as our first take profit level. Conversely, if the data shows that claims came in lower than its estimate, US dollar is going to rise, demand for the US dollar is going to pick up. That means Aussie dollar is likely to fall. And then, of course, we're going to use this area or the region of the first support at 66.26 to help us identify a suitable take profit level for any short Aussie dollar trades. Right, okay, similarly here on the 4-hour time frame, we do see stochastic and oscillator highlight a potential oversold condition, right, which is also a little bit similar to what we saw here on 3rd of May, but you can see it did pull back, consolidated for a while around 66 cents before edging higher, before finally moving down. So you can see not every oversold or overbought condition, pardon me, is going to result in a sharp bearish reversal, right? So we got to be watch out for that. Okay, so we have the Aussie now. Okay, I think that's pretty much it. I don't think there's anything else to identify for the Aussie here. Okay, let's move on over to Nasdaq, Dow, and DEX. All right, so we'll start with Nasdaq. Uh, instrument. Okay, let's just do Dow first since I have Dow and DEX lined up here. So let's do Dow and DEX. My NAS is probably have to. I'll just type it up later. Okay, so let's just start with Dow. DEX, and then then we'll cover Nasdaq. All right, so let's start for indices, right? I like to start the analysis on a weekly time frame. It really helps us appreciate the significant trends for the indices, right? So I believe the Dow is about to make an all-time high. Right, remember this is the all-time high for the Dow Jones, which is at 40,056. It's currently trading around 39,950. If we look at the S&P 500 and the Nasdaq, I believe they have reclaimed or they've made a new all-time high. But as you can see for the Dow, it's quite likely it may surpass this level today, if not tomorrow, right? Okay, so take note of that. Dow is close to testing its previous all-time high and could potentially make a bullish breakout as well. Right, okay, in terms of support, I think quite clear. This pullback here has occurred at 37,884 is our first support for the Dow. That's very clear here. And we can also run the Fibonacci retracement. We start the retracement from here. This swing low on the 23rd, on the week of 23rd October 2023, going up to the all-time high. We can see that the Dow has found support just above the 38.2% Fibonacci retracement as well. So this is a pretty strong support zone for the Dow. And if I were to identify the second support, it would be at this previous pullback. Remember, this was a pullback resistance at the previous all-time high back in January of 2022. This, I would say, would be the next second support around here. Right, okay. Now, what about resistance now? Let's say, because we know Dow is attempting to break above this current all-time high. Where would I identify the next resistance? Right, there's a couple of things we can do. One is we're going to try and use a Fibonacci extension level. To find that extension, we need to use the retracement tool, and we'll start it from here. The 3rd of Jan 2022, the week of 3rd Jan 2022, ending on the week of 3rd October 2022. Now, key extension levels lie at 137 and 161%. We can see that the Dow has already gone past 137%, so this extension is no longer valid, but we do see 161 at 42,120. So let's just keep the 161%. And for now, I think we can use this as the second resistance for now. Right. There's also probably what we can do is Fibonacci projection as well. Now, if we zoom out a little bit here, we have a nice strong move here where we can use the projection tool. So projection tool involves 3 points. So we'll start the first point here in March of 2020, going up to the second point on Jan 2022, ending with the third point in October 2022. Now, key projection levels lie at 61%, 78.6%, and 100%. So we can see right now where the all-time high sits is where the 61.8% Fibonacci projection sits. This is where previously it ran into resistance right smack on the 61.8% projection. Now, if you've done the analysis beforehand, and if I'd seen this projection at 61.8%, we would have identified this as a major resistance zone where we could have identified the take profit a take profit level around here. Right, okay, so it's currently testing the 61.8%, so let's just keep that. 78.6 is close, quite, or a little bit close to where the extension lies, so maybe we'll just keep 61.8 and 78.6 for now, get rid of the 100%. Right, let's see if there's anything else we can use. Um, Perhaps maybe we can do another retracement, find another extension as well. And this time, this is a much shorter retracement starting from the all-time high, going down to the low here on the 15th of April. Right, we can also see there's an extension at 161% that aligns quite close to this area here. So maybe because 78.6 projection is quite far from where this these other levels lie. So for this projection, we'll just keep 61%. We'll get rid of 78.6%. Maybe they'll be useful in the future, but not right now. So we are using two extension levels, 161% to help us identify the second resistance zone. All right, okay, so we have the second resistance zone identified by two Fibonacci extension levels. All right, now let's zoom on down to the daily time frame and see if there's anything, if we can fine tune the analysis if necessary. As of now, no, I think these levels are all fine, right? So take note, this is a pretty strong resistance area here. Now, should we see equity markets? This is quite a tricky juncture. I would say it's quite a tricky juncture. Are we going to see price, the index stall around this level and pull back, or are we going to see a potential bullish breakout? So this is quite, honestly, this is quite difficult to call where how this is going to break out. But if we do see a bullish breakout take place today, right? We do see a bullish breakout take place today, right? I wouldn't want to keep a very wide stop loss because you can see the next major support level has been identified at 37,000. Maybe there's an intermediate support level that I can sort of see around here, right? There's a pretty decent intermediate support level here. But even then, this is maybe perhaps a bit too far, right? At 39,300, right? So if we do see a potential bullish breakout occur today or tomorrow, right? Maybe if you do not use to wish a very wide stop loss and use this intermediate support here at 39,300, what I would recommend is to identify the low of the day, right? Today's low of the day is at 39,943 and identify a stop loss level slightly below this level here at 39,944. Right? Remember, we may see a potential bullish breakout occur. However, this is quite tough to call, right? Honestly, it's quite tough to call this one here. But if we do see that bullish breakout occur and you do not wish to keep a very wide stop loss, I would say identify the low, the absolute low of today's candle, and then place your stop loss slightly below that level here to give you a little bit of support. Otherwise, the other intermediate support level that I see is this overlap level here at 39,300. Right, so these are the key levels for the Dow. Let's move on over to the DAX. Okay, so I'm using the instrument Germany 40. Once again, let's start on the dollar also on the weekly time frame. So similarly here, right, this was the previous all-time high for the DAX, right, which was at 18,566, and we surpassed that last week, right, a very strong move last week for the DAX as well. Now, of course, what was previously a resistance area could now potentially function as support. So I would identify this previous all-time high as an intermediate support level. So that's going to be at 18,500. And the first major support that I see for the DAX is this pullback that occurred here on the 15th of April. So this is the first major support for the DAX. And of course, because of the wick that extends all the way down, right, this is the support zone here as well. Okay, right. Now with DAX trading very close to its all-time high right now, this is the all-time high for the DAX, which is at 18,920. Right? How are we going to identify the next suitable resistance levels? Similarly, like what we did for the Dow, we're going to use a combination of Fibonacci projections and extensions as well. So we'll start from here. Jan 2022 going down to October 2022, we can see that 161% is the first major resistance here. And we can also use a projection starting from here, October 2022, going up to July 2023, ending with October 2023. Let's pull up all the projection levels, right? We can see 61, 78, they have been surpassed, so we'll just keep 100%. So we have a pretty, I would say, pretty wide resistance zone right here. But given that price is trading quite close to this zone here, right? This will be the first target here now. Of course, what this resistance zone tells us is that we have a potential take profit level here. So if you've gone long on the DAX since the beginning of last week or sometime last week, and you're still long on the DAX, right? Perhaps you should be looking to identify a suitable take profit level that's identified by the Fibonacci extension at 161% and the Fibonacci projection at 100% here. And of course, you should be trying to trail your stop loss as well. Right? You should be trying to trail your stop loss as well. And your stop loss should be close to at least 18,510. See, there's an intermediate support level here. So you should be trailing your stop loss here as well, right? Okay, so this is what we have for the DAX, which is Germany 40. Anything else that I can use? Okay, maybe we can use a Fibonacci retracement starting from here, October 2023, going up to this week's high. There may be certain levels, fib levels that we could use. Right, maybe 38, we'll keep 38, and then we'll just keep 61. I'll explain in a bit why 38 and 61. Right, 38, of course, because it's I guess this zone here extends because at the bottom of this wick that occurred on the week of 15 April comes quite close to where this 38%, and we'll keep that. And also I see a strong overlap support here as well at 16,470. So this is where the second support would sit. See, there's a resistance here on July 2023, and then support in early Jan of 2024, creating an overlap support that also has the presence of a 61.8% Fibonacci retracement. Right, let's quickly go down to the daily time frame and see if there's any if there's a need to fine tune the analysis. I think this is pretty much fine. I don't think there's anything else. So take note, right? This intermediate overlap support at 18,500 can also be identified as a potential buy entry as well. So should we see the DAX pull back towards this level and perhaps stabilize around here, it may help us identify a potential buy entry as well. And should that bullish reversal occur around 18,500, then of course we're going to target this resistance zone as a suitable take profit level. All right, okay, this is what we have for the DAX. Let's move on now over to the NASDAQ. So the NASDAQ, I'm going to use NAS 100 as the instrument. So let's use that. So similarly, we'll start on the weekly time frame. All right, let's start this analysis from scratch. This was, I believe, part from last week. So let's start this analysis from scratch. I give us a clean canvas. So yes, indeed, this was the previous all-time high for the DAX that was set in the week of 18 March, which was at 18,628. Now, of course, after yesterday's soft CPI print, we've seen the NASDAQ 100 surpass this level here. So what was previously a resistance can now be used to help us identify a suitable support area. So I'm going to use this level now to identify my intermediate support. So intermediate support is at 18,334. First major support for the NASDAQ 100 is this overlap level here. I see a pretty decent overlap level here at 16,768. Right? And then now resistance, right? With price trading above the all-time high, where can we identify the resistance? Same thing. We're going to start with extension here. Try to use extension levels. So key extension levels are 127, 161. Right? We can see previously the previous all-time high was sitting around the area of was within the area of the extension at 137%. Perhaps now we can use the 161 to help us identify the first resistance. Perhaps this is what is going to be needed, although it's still pretty far from where the index is trading. Perhaps this is one major resistance level. Next, we can also probably try a Fibonacci projection, this time starting from here, 10th of October, going up to 17th July, ending at 23rd July. You can see the 100% sits around here. So let's see, we can probably we can definitely use the 100% as well. So what I would say is first major resistance for the Nasdaq is likely to be around the 100% projection level. So that's going to be at 19,577. And the second major resistance is going to be at the extension at 161%. So that's at 20,700. Now that's quite a far way off, but this is what we have here for now based on resistance as well, because we don't have any other price reference or any other areas to reference, right? What I mean, we don't have any other swing high resistance or pullback resistance or overlaps that we can reference in the past, because of course the index is trading at all-time highs. So we are going to use Fibonacci extensions and projections to help us identify the next major resistance areas. So now we've seen this bullish breakout for the dollar for Nasdaq occur, right? It happened well, yes, yesterday, of course, right? So we saw this bullish breakout take place, right? Now, should we see the Nasdaq 100 pull back towards 80,300, right? If it does pull back towards this level here, it may help us identify a potential buy entry, right? And we may see prices stabilize around here before bouncing higher. So take note, we see the bullish breakout take place. We may, if it does pull back and it finds support here, right, this may help us identify a potential buy entry as well. And gold. All right, sure. Okay, we'll cover gold as well. We'll wrap up with gold as well. Okay, so before we start on gold, I'm just going to quickly launch a poll. Truly appreciate it if you can give your feedback with regards to today's webinar, and we'll conclude today's session with gold as well. All right, just going to keep the poll running for another 10 to 20 seconds. Right, thank you very much for the feedback, guys. Keep it coming in. We truly appreciate your feedback. All right, great. Okay, I think pretty much. All right. Okay, so I'm just going to close the poll now as well. All right, great. Thanks for the feedback, everyone. Truly appreciate it. All right, here we go. And we'll end today's session by looking at gold. All right, so the symbol, ticker symbol that I'm using is XAU USD. So this is the symbol for spot gold. Right, similarly, when we look at gold on the, okay, let's quickly do it on the weekly. Right, of course, this is going to be the all-time high for gold prices, which was set in the week of 8th of April, which is at 2,431. Right, that's quite clearly going to be the first major resistance. Right, first major support I see is this pullback level here that occurred at the end of April and early May at $2,300 per ounce. So very clearly, this is the first major support. We can also run a Fibonacci retracement from this swing low here, October 2023, going up to the all-time high. Let's pull up all the fibs. Right, we can see that this pullback support level has occurred very nicely, where the 23.6% Fibonacci retracement sits as well. And we can use the 38% to help us identify another support zone. Right, we see pullback support that has taken place here at 2,156. And we have the Fibonacci retracement at 38.2% as well. So this is our next support zone, right? 50 and 61 is our levels that probably we may need, or that we can potentially, that we can reference in the future should we see a further pullback in prices. But of course, with the way gold is trading, it does look like it's to the upside. The bias does look like to be to the upside for now. Very strong bullish momentum after breaking out of this multi-string high resistance of 2,100. And I also see a nice ascending trend line as well on a weekly here. Right, if we zoom out a bit, right, previously this level here was the major resistance, right? If you look at it, this was a major resistance level for gold in the past at 2,000 $2,075 per ounce, making a swing high resistance in August of 2020, another swing high resistance in March of 2022, third swing high resistance is May of 2023, and even here as well, December of last year, right? It failed to break above this level quite convincingly before finally we had this massive bullish breakout here. As you can see here, this was some significant multi-swing high resistance that lasted for about almost 4 years, right? So for a period of nearly 4 years, this was a major resistance level that finally got taken out, right? Just wanted to highlight that as well. All right, okay. Now that we've seen the analysis here on the weekly, let's move on down to the daily and see if we can fine tune the analysis as well. Now, when we look at it, oops, on the daily as well. Okay, let me just put this here. Right, so what did I say? 23 and 38, right? Yeah, let's keep 23 and 38. Right, so not only did we have the 23 points, okay, we look at our daily here, right? Not only did we have the 23.6% Fibonacci retracement help us identify a support zone, right? We also saw stochastic sort of indicate oversold oversold conditions as well, right? So in this case, we had a 23.6% Fibonacci retracement and stochastic oscillator indicating a potential oversold condition. Well, of course, RSI didn't drop as low as 20 or under 30, but generally you can see stochastic did help us identify. And when you look at it in the past as well, right, on 15th of Feb, 18th of Jan, and of course here on the 12th of December, right? Whenever stock, at least on the daily time frame, when stochastic has dropped underneath 20, right? And along with RSI as well, it has helped identify a major bottom or bullish reversal for gold prices here, especially for the one here on October on 2023. We had not only the stochastic oscillator, but the RSI as well indicate a major oversold condition. However, when you look at the other periods as well, in December, Jan, and February, it did help us identify a short-term bullish bounce as well. And this bounce here in December was pretty decent. This one here in Jan, not so great. However, this one in February was pretty good as well. And here similarly as well. At the beginning of May, we did see find a nice support level as well. All right, now for what this means is for gold, right, it is currently testing an intermediate resistance, right? I would say this is an intermediate resistance level for gold. Uh, right? Are we going to see a oops? Are we going to see a potential bullish breakout occur? Right? What could cause it to have a bullish breakout would be unemployment claims. Now, so if unemployment claims come in higher than its forecast, this is quite likely going to cause the dollar to sell off. So if the dollar sells off, gold prices should be lifted. So should we see claims come in higher, that may be the catalyst that we need to see this bullish breakout occur for gold. And if this bullish breakout at $2,390 per ounce does happen, we can then target the first resistance at 2,431 as a potential take profit level. Now, conversely, if we see claims come in lower than the forecast, right, then that means we are quite likely to see stronger demand for the US dollar. So we may see gold prices reverse, and especially if it breaks through this ascending trend line, then we may have we can target a suitable take profit zone that's identified by the bullish Ichimoku cloud and the 23.6% Fibonacci retracement. All right, Trevor. Yes, yes, I'll definitely feedback this to IronFX as well. I'll get in touch with the team at IronFX, and hopefully we can schedule something pretty soon. All right, for sure. I've taken note of that. Definitely. All right, okay. So this is what I have for today. Right, all right. Thanks everyone for tuning in to today's session. Right, take note. I hope this has been a really good session for all of you. And do look out for all upcoming webinars by IronFX. And if you have missed any webinars, head on over to their YouTube page where you can watch all the past webinars as well. They will all be uploaded, or the recent ones will be uploaded in due time, whereas the ones that have been conducted in the last few weeks will definitely be there as well. All right, thanks, Trevor. All right, okay, I don't really, all right, yeah, it's just more of sinuses, right? It just comes and goes with allergies and stuff like that. So, yeah, it's not, if it was the flu, then it would be easier because, I'll just treat it once, it'll go away, but it's more of allergies as well, right? So you might hear me sound like this from time to time. All right, thanks for the kind words. And I wish all of you uh, a great trading week. And of course, have a great weekend. And I'll catch you all at the next webinar. Thanks, everyone. Take care and have a great trading week.